yes. Yeah, 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 body. Yeah, yeah, my mind. Yeah, yeah, my mind. I said 5 in the morning. I wake up to 5 for my earnings. The fear in my mind is a warning. Pray to the one you're relying. I've been wandering all day. I tried to be fine, but I can't be. The noise in my mind wouldn't leave me. I tried to get by, but I'm burning. And behind my mind, it runs. All these thoughts of trouble me. Fighting to give up my pain. Fighting to be on my lane. My mind running to the other side. When it's time to leave my life, then it tries to take me out. Tell you what I need. Right, yeah. I really need time now. I need a free mind now. I really need mine now. I need to free my mind now. I really need time now. I need to free mind now. I really need mine now, yeah. This is the peace that you cannot buy. Send me a love that you cannot mix. One is the joy that you cannot waste, and the other one price that you cannot fix. This is the peace that you cannot buy. Finding a way where you cannot see. Man with this system, he cannot pray. I need to find release. But behind my mind, it runs. All these thoughts have trouble me. Fighting to give up my pain. Fighting to be on my lane. My mind running to the other side. When it's time to leave my life, then it tries to take me out. Tell you what I need, right? Yeah, I really need mine now. I need to free mine now. I really need time now. I need to free my mind now. I really need time now. I need to free mine now. I really need time now. Oh yeah, just set me free, freer than the open mind, farther than the
Welcome in, taxpayers. Happy Friday. We're going to get started here shortly.
Set me free. Now I need to find release. Set me to the open sky. Now I need to free my mind. Yeah. Boom, 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 boom. Boom, 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 boom. Hey, oh no. I might be falling deep. 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 Tell me now what you need. I've been going to God when I'm all
Who's ready to save some money today?
I might be
Go ahead and let me know in the comments section.
falling deep. I might be falling. I might be falling. I might be falling. I might be falling, yeah.
Can we cue my pump up music? Happy Friday, everybody. Welcome back. 1, 2, 3, cut it. Thank you guys so much. So excited to be back here with everybody. If you are calling in, I want to make sure that you're putting in the state and location that you're calling in from right now in the comments section. So if you could just take the moment really quick, go ahead and drop the city and location that you're calling in from in the chat box. And I want to make sure I can see some people that showed up. I saw Chrissy B here, Jaime Reyes, Texas Panda, Daniel Aranda, Tamika Coleman, Sweet Lady 0512. Just want to say hello to all of you guys. So excited to be on here with you guys today. I have a special treat for you. We're going to go over 5 biggest LLC mistakes to avoid. If you have an LLC, you're going to want to make sure that you avoid some of these mistakes prior to year end. And more importantly, if you have not established an LLC, you're going to want to know some of the pitfalls with having one. Majority of the taxpayers who follow me on YouTube channel, they have LLCs. And part of the reason why is because my video that went viral, how to pay yourself as an LLC, is over 4 million views. So majority of my subscriber base are LLC owners. And here's the thing. There are 31.7 million LLC owners as of 2023. 31.7 million. That's a big number. I know that if you're thinking about setting up an LLC or if you already have one, I know that sometimes in your mind, you're probably wondering, what are some of the things that I could be doing to make this all better for me? What are some of the things that I could be doing to be saving more money with my LLC? And what things do the IRS look for? What are some of the mistakes that new business owners make that I can prevent? So what I want to do is I want to take the time right now to figure out who are the new business owners in here. If you're a new business owner, put the letter B in the chat box. If you're an experienced business owner, and experience is you've been in business for, let's just say 3, 5, 10 years, put E in the chat box. I just want to know who I am speaking to. Today's lesson, I'm going to make it very brief because I've already kind of written down my notes on exactly what I want to discuss. But 1 out of every 6 customers that comes to my office already has an LLC. I track all this information. So I wanted to go over some of the most important things to know prior to you establishing an LLC, and really the big mistakes that people tend to walk into because of lack of information. I believe that once you guys have some of this information that I'm going to go over today, a lot of you guys will fully understand the power of your LLC, but more importantly, how you can utilize it. And you'll also be able to have enough information to be able to educate someone else, maybe a peer, a friend, a family member. So what I'm going to do today is I'm going to jump into the iPad and I'm going to go directly into today's lesson. Now, 5 biggest LLC mistakes to avoid. I'm sure some of you guys probably already have it in your head what some of these mistakes could be. So if you want to start chatting about it in the comments section, I will be looking throughout this entire live session to see who's commenting, who's participating. It lets me know who's really bought in on what we're trying to accomplish here in this lesson today. But I want to hear your opinions. So feel free to chat in the comments section. Also, another thing, if you have not taken it upon yourself to sign up for the tax-free wealth event, we kick off in 10 days. So exactly 10 days from now, we start the tax-free wealth event, which is a 5-day conference that I put on. It's completely digital. It'll be completely online. And it gives me an opportunity to work with some of you guys one-on-one. You guys who are VIPs will be able to unmute, talk to me, and I'm going to help you put together a tax plan over the 5 days that we will be spending time together. When we did this event last year, an average of $50,000 was saved for 6-figure earners, and for 5-figure earners, an average of $20,000 was saved just by the information that was being discussed during these 5 days. So if you're thinking, Carlton, I could use an additional 20K or an additional 50 or even 100K that doesn't need to go to Uncle Sam, then I would recommend signing up for the tax-free wealth event. I'll go ahead and quickly show you guys that screen so you know where it is. This is that event. You can go to thetaxfreewealthchallenge.com/join the challenge. I'll also have my team members drop the link inside today's discussion notes, but it'll be 5 days. Day 1's mindset, day 2's entity structuring, day 3 is advanced auto and home office, day 4 is income shifting strategies, day 5 will be advanced real estate tax strategies. VIPs are $297 to purchase a ticket, and general admission is $97. All right, guys, let's jump into today's lesson because I have a lot I want to discuss with you guys, and I want to make sure I get back over to my iPad scene here. So, number 1, biggest mistake, let me make sure I have the correct ink pen, is not knowing the type of income you're receiving. Okay? So, this is so important because if you're a new LLC owner, there's 3 different types of income that you can receive. Here are the 3 types of income that you can receive. Number 1, you can receive passive income. Passive income comes in the form of rental real estate. Maybe you have some stocks that you're holding on to. Passive income really comes from like dividends and stocks that you're holding on to, but really it's rental real estate, right? You're going to get a majority of your passive income coming from rental real estate. The second type of income is earned income. This is going to come over from a job, W-2, 1099 that you might have. And the third type of income that you're going to receive is portfolio income. This is the type of income that you're really subject to from capital gains on stocks and dividends that you hold on to. Okay? So these are the 3 different types of income that you could be receiving into your LLC. So in order for us to avoid making a mistake, we first need to understand, do we want these three different types of income flowing through an LLC? For many of you guys who are getting into rental real estate, passive income should flow through an LLC, but it does not have to flow through an LLC. But the reason why most taxpayers will take it upon themselves to establish an LLC is because they understand that liability protection is extremely important. And separating yourself from your business endeavors is one of the smartest things that you can do if you're trying to build your wealth correctly. Agreed? So if you're earning passive income, which can come from the form of rental real estate, from owning an investment property, passive income is not subject to Social Security and Medicare tax. This is brilliant, and I'm glad that passive income is not subject to Social Security and Medicare taxes. But one of the mistakes that taxpayers will make is that the rental income that they're receiving, they will place it inside of an LLC that they've already taxed as an S corporation. And one of the pitfalls to placing rental income inside of an S corporation is that you're now subjecting the passive income that is not subject to Social Security and Medicare taxes to now be subject to Social Security and Medicare. Do any of you guys know how much Social Security and Medicare taxes are? Does anyone know in the comment section care to comment on it? Social Security and Medicare is 7.65% on the employer side, and it's 7.65% on the employee side. Okay? So as a total, this payroll taxes or Social Security and Medicare taxes comes out to 15.38%. Now, the reason why this is so significant is because when you're earning passive income, the only taxes that you're really paying on the passive income is just your federal taxes to Uncle Sam and then state taxes if you're in a state that taxes, which means that if you have passive income coming from Texas or Nevada or Florida, you're only paying one tax on this income, which is federal tax. But if you decide to place your passive income into an LLC that's taxed as an S corporation, you will subject your passive rental real estate income to 15.3%, which is Social Security and Medicare taxes. Not to mention, there's a whole lot of negative downsides to placing real estate inside of an LLC that has been taxed as an S corporation. So one of the biggest mistakes that LLC owners make is using their LLC and converting it to an S corp and having their passive income from some of their passive investments still going through that LLC taxed as an S corporation. This would be considered a big no-no, and Carlton doesn't want you paying an additional 15.3% in taxes that you would have thus not had to pay on your passive income. Make sense? This leads me into number 2. The second type of income that you can earn is earned income coming over the form of W-2 or 1099. Sometimes I'll talk to taxpayers and they'll tell me, Carlton, since I don't have a business, should I put some of my W-2 income into my LLC to then start saving money on taxes? The answer is that setting up an LLC does not save you money on taxes. And you might be wondering, like, why wouldn't it? Don't business owners save more on taxes than W-2 taxpayers? Not necessarily. Business owners don't save more money on taxes than W-2 taxpayers. Business owners have more tax deductions than W-2 taxpayers. And I really want to make sure I explain that extremely slow. Business owners don't save more money than W-2 taxpayers. Business owners have more deductions than W-2 taxpayers. And the reason why is because the IRS has created more tax incentives for self-employed business owners as opposed to creating more tax incentives for W-2 taxpayers. Don't look at me. That's the IRS. Now, knowing this information, if you have W-2 income, ordinary income, that is already being subject to federal taxes, already being subject to state income taxes. And by the way, your W-2 taxes, you're also paying 7.65% because you're an employee, right? So you're going to pay that 7.65% on every paycheck. Why would you want to take that money that's already been taxed and allocate that money from your W-2 job over into this brand new LLC that you set up? On the W-2 side of the table, like we just said, you've already paid into federal taxes. If you're in a state that taxes, you'll have your state taxes. And most importantly, you're paying 7.65% Social Security and Medicare tax. Okay? So you're already paying into 3 separate different taxations. But then in your head, it might make sense for you to set up a business so you can create more deductions. You can create more deductions by having an LLC, but you should not allocate your W-2 income that is already been subject to federal, state, and self-employment tax, Social Security, and Medicare. You should not allocate this income into a brand new LLC, subjecting this brand new income to possibly being taxed. Now, you might say, Carlton, well, what if I need to self-fund my business to start something? That is different. That's doing an owner's capital contribution, to your LLC. That is completely different than just moving money over into an LLC and then trying to take write-offs. You can make an owner's capital contribution to a brand new LLC, which is no different than self-funding it. If I wanted to start a lemonade stand outside of my house today, I need to have money to be able to go buy the lemons and to go buy the ice cubes and to go buy all the different things, such as like a table and a sign, right? So I might choose to take money that's already been taxed from my W-2 job, allocate that money over into an LLC, and then take tax deductions inside of that LLC. But I should not be taxed on the money that's already been taxed just because I move that money over into the LLC to start using it for business funds. Is this making sense so far? I want to make sure that I can see some of the comments here. So if you're watching this right now, PD from H-Town, what's going on, my man? If you're watching this right now, you should not be looking at your W-2 job and wanting to take the W-2 income to funnel it into an LLC for tax savings. That isn't going to save you any money in taxes. That's essentially moving money from the right hand over into the left hand. And you have to be very careful because if you're not doing your accounting and you go to file your tax returns, your CPA is going to think, okay, this business has $5,000 in it. Should we pay taxes on that? When really that was an owner's contribution, a capital contribution to the LLC, which means, business owner, if you're watching this right now, if you have self-funded your own business, you need to have an accountable plan that allows for you to be reimbursed for the money that you donated or contributed to your brand new LLC. Because you're the one that's already paid taxes on this income. Why should you be subject to taxes twice? So you should be reimbursed that money that you used to start your business, and it's carried as an asset on your books. The money I contributed to my business to get it started, that's considered an asset on my books. I'm not going to pay taxes on that money that is used to start the business when I already got that money from my W-2 job. Okay. So I want to make sure that this makes sense. Now, outside of placing your W-2 income inside of your LLC, which is a bad idea, we also have portfolio income. And I get asked all the time, Carlton, if I have stocks or dividends, should I also have this going through an LLC for asset protection? Most of the time, I'm going to say no. And the reason why I'm going to say no is because many people who are investing in the market are investing in the market passively. And portfolio income, although it's not subject to Social Security and Medicare taxes, is also a type of income that has lower taxation. When you go into investing into stocks and you're holding on to those stocks for longer than a year and you're earning capital gains from those stocks, you have separate capital gains tax rates. And these tax rates are far more favorable than ordinary income or earned income tax rates. But there's also less liability associated to you because you're not running an actual business. You're investing in somebody else's business and earning a percentage of the profits. And that's why it's considered portfolio income. You're choosing to join different companies, which is a portfolio, maybe even a portfolio companies like the S&P 500, and you're earning capital gains income or dividend income from investing into these different companies. So these companies are taking on all of the liability. You're choosing to invest in those companies. There's not a whole lot of liability associated with you, but what you could choose to do if you're somebody that is day trading is turn your day trading business into an actual business and have that money flow over to an LLC. For 95% of taxpayers who are not doing day trading, who are investing in the stock market passively, who are earning portfolio income, are typically doing so amongst their social security numbers, which is completely fine, which is another part of the reason why we don't have portfolio income in most cases going through an LLC. Does this make sense? Put a yes in the chat box if it does. Put no in the chat box if you're lost. Now, the number two mistake that I see with LLCs is not establishing the LLC prior to a rental acquisition. Okay? So you're going into rental real estate. And by the way, congratulations if you're going to be going into rental real estate anytime soon, maybe before the end of the year. Maybe you've already closed on a property this year. Congrats. But a majority of taxpayers who go into rental real estate, what ends up happening is that they want to buy real estate in the name of an LLC. But then they get on the phone with the mortgage lender and they find out that if they were to set up a brand new LLC, that they wouldn't be able to get the loan in the name of the LLC. So they get all discouraged. They even give up on the idea of having the LLC and they settle for just umbrella policy insurance, which is fine if you just want umbrella policy insurance. But I'll come to tell you that umbrella policy insurance is not enough. But most of the taxpayers who I work with, I would prefer them to have their real estate inside of an LLC. The reason why I want you to close on your property in the name of the LLC is because of this thing called due on sale clause. Okay? What a due on sale clause is a provision. It's a provision in a loan or a promissory note that will enable your lender to demand the remaining balance of your mortgage to be repaid in full anytime your property is sold or anytime your property is transferred, which means that if Carlton goes and closes on a property in his individual name, in his normal government name, and I get the loan in my name, plus I put title in my name, and then I go to switch that property to an LLC later, I could run into this due on sale clause issue, causing my mortgage to become due. Now, are there ways to get around the due on sale clause? Absolutely. We talk about that inside of Tax Alchemy. We have tons of ways to get around this due on sale clause, by the way. But this is what most taxpayers deal with. So they never get around to having LLCs and asset protection because they're so worried about their mortgage becoming due if they were to transfer this property that they closed on in their individual names into the name of an LLC. So what's the solution? Let's talk through this. If the mortgage lender doesn't want to give my brand new LLC, X, Y, and Z property management, whatever, this loan, and they want to give Carlton Dennis the loan, sure, fine. I get it. I have a better credit history report than my brand new LLC. I've been alive longer than my LLC has been alive. So I get the reason why you want to give me this loan as opposed to giving it to my brand new LLC that I just created 2 weeks ago. Understood. But do I have to close on the property in my name? Put yes in the chat box, put no in the chat box if you think I can close on the property in a different name. Do I have the ability to take a loan in my individual name, but then when it comes to titling the property before escrow closes, could I title the property in the name of an LLC? Is that possible? Put yes in the chat box if you think it is possible. Put no in the chat box if you think it's not possible. And I'll take some time to let you guys comment on that. So what we're talking about right now is the due on sale clause as it pertains to real estate. One of the biggest issues that I see with real estate investors is they don't establish the LLC prior to closing on a real estate transaction. Do you believe that it's possible, and this is something for all of you guys to comment on, do you believe that it's possible to get a property in your own name, so the loan is going to be in the name of Carlton Dennis, but then you close on the property in the name of an LLC? Is that possible? And I'll wait for your guys' responses. Put a yes if you think it is. Put a no if you don't. This is good. I'm glad that we have some mixed comments here. I see some no's. I see some yeses. I see some emojis. Heather said yes. Tamika said yes. Raj said no. Some people said no. So I'm going to inform you now that the answer is yes, that you have the ability to communicate directly with your title and escrow officer to close on real estate in the name of the LLC, even though the loan is in your personal name. What this does, by the way, is it allows for your real estate property to be on title as the owner of the property, removing your name, your information, your address from being associated to this new investment property that you wanted to close on. From a liability protection standpoint, who is safer? The person that closes on an investment property in their individual names, or the person that closes on an investment property in an LLC? Put LLC if you think it's LLC. Put person if you think it's closing in your individual name, if it's safer. I would argue that closing on a property in my individual name is risky when I'm starting a business and someone else is going to be renting the property from me. If I can do anything to protect my personal name and information, I'm going to do that. And one of the best benefits that you have is the benefit of the LLC's liability protection. It's limited liability coverage. But you will not have limited liability coverage if your LLC is not on title. Your LLC has to be on title in order for you to have liability protection. So, if you're trying to avoid a mistake this year or next year, if you're going into rental real estate, one of the most important things that I can advise you to do is to make sure that you establish an LLC prior to closing on the transaction. Communicate directly with your lender prior to closing on the transaction, making sure that your lender knows that you're going to be closing on the property in the name of the LLC. All right. Let's jump to the third one. So we talked about the different types of income that we earn: passive income, portfolio income, ordinary income. Passive income is not subject to Social Security and Medicare taxes. Portfolio income is not subject to Social Security and Medicare taxes. Ordinary income is, which means that we have to be very particular about how we use our LLC. There's no downside to having passive income flow through an LLC. There is a downside, though, if you decide to switch your LLC over to an S corporation, which is part of the reason why we don't use S corps for rental real estate, since we're subjecting passive income to self-employment taxes. That's not something we want to do. Ordinary income is completely fine to have flow through an LLC, but we're not going to take W-2 income that's already been taxed and put that through an LLC, because that makes absolutely no sense unless we are making a capital contribution to our business in order to start the business. And then we have portfolio income, which is at a much more favorable tax rate. But typically there's an entity that we're investing in that's already set up that is allowing us to get portfolio income. Apple is a corporation. Tesla is a corporation. You're investing into an entity already. Makes sense? All right. We talked about establishing an LLC prior to closing on a real estate transaction. Why is this important? Because if you want liability protection without worrying about due on sale clause, you're going to have that property closed in the name of an LLC. If you want to have liability protection without worrying about due on sale clause, you're going to close your real estate transaction in the name of an LLC. Just making sure everybody is understanding this information. Okay. Third mistake I see with new LLC owners is not using your EIN number. This one right here is one that I honestly, I have a hard time dealing with. The reason why I have a hard time dealing with this one is because I don't get the reason why you would set up an LLC and then not choose to use it. It's like going to the gym and not touching any of the weights. It's just like, I'm just here for sauna and steam room. Well, why are you paying for a gym membership? You should just go to a spa, right? Many taxpayers will set up brand new LLCs. They'll be given an EIN number, and then they will not take this EIN number to a bank to open up a business checking account. And I don't know why business owners don't do this. They have the LLC established. They're making income, but they're choosing to make their income over here in their personal bank account versus using their business checking account. It drives me absolutely bonkers. I just don't even get the reason why we set up the LLC. If you're doing this right now, where you have a personal bank account and you're still receiving all your commissions, 1099 commissions through your personal checking account, people are wiring you money, Venmoing you, Zelling you, but you took it upon yourself to set up an LLC, you have an EIN number, and you haven't gone to the bank to open up your business banking account, you're exposed. I just want to make sure everyone understands this. You're 100% exposed. You don't have liability protection. You're not operating as a real business owner. You're operating as a sole proprietor business owner. And if someone were to sue you, they have every means of winning this lawsuit if it pertains to your business and coming after your personal assets because you've never drawn the line between what is business and what is personal because you're using your personal bank accounts to receive business income. Some of you guys that are watching this right now are like, Carlton, I would never do that. I would never do that. And some of you guys that are watching this right now, you're directly doing this stuff. I'm just going to go ahead and say this. I'm not the tax accountant on the internet that's going to sugarcoat stuff. I know you're abusing the LLC structure by not utilizing. You need to cut these behaviors out because the IRS is getting smarter and smarter every single year. And so are your taxpayers and your clients that you're transacting with. They do have the means now to sue you. They have the means now to get on with an attorney and say, you know what? Let's just rip this Band-Aid off and see what this person can do. And if you have not taken it upon yourself to go set up your business bank account and make sure all monies are flowing through that business bank account and all expenses are flowing through that business bank account, you're subjecting yourself to a lawsuit where all of your personal assets are exposed. That's your personal bank accounts. That's your personal assets, such as your cars, even your IRAs are all fair game in a lawsuit. If you're somebody that's telling me, Carlton, dude, I want to build my business and, I want to protect my family and have tax-free wealth and, generational income, then you're doing it completely wrong if you're not taking it upon yourself to use your business checking account. You're actually doing it backwards, okay? I want you to start implementing best practices. And best practices is making sure that you follow the instructions of the LLC. It's very simple. Once the EIN number has been established and you have your articles of organization, take that information to whichever bank you feel comfortable with. You don't have to ask me which bank, Carlton, that you bank with, because the place that I bank with might not be the place that you like banking with. Maybe I have a great relationship with somebody at Chase and you had a terrible experience when you went into Chase, okay? So at the end of the day, the bank does not matter. Utilizing the bank and account is what matters. And that is the part that I'm harping on. So if you're watching this right now and you're like, dude, Carlton's being really intense about this one, it is my job, my duty and responsibility to help you protect yourself, not only from the IRS guys, but from other creditors who are going to try to come after what you're trying to build. And if you think that if you're going to establish real wealth and there's not going to be a target on your back, then you're thinking completely wrong. If you think that you're going to establish real wealth just by flying under the radar, then you need to make sure that you are actually flying more under the radar by doing the things correctly that are within your control. Utilizing your business bank account and separating it from your personal assets is one of the most important things that you can do as an LLC owner that is self-employed. All right. Number 4, not knowing how to reimburse yourself. Many business owners spend money on their business. And let's just say that you're at Staples and you left your business card. Because this does happen, right? We'll go somewhere and we're like, snap, I don't have my Amex Business Platinum, my Chase Freedom Unlimited, my 0% interest card. But you know that this is a business meal that you're at. Or you know that you're inside of a store and you need to buy something for business. Should you just walk out the store? Should you just not buy what you were going to buy? Should you just not take the expense at all? I would argue against that. I would say that if you have an accountable plan in place where you're reimbursing yourself, it's okay to have these one-off instances where you're paying for something with your personal card that's business related. Now, in order to make sure that you're doing this correctly, the accountable plan has to be established, which means that you have to account for the business transactions that you're taking on your personal card, and that needs to be allocated back over to your business. And then you personally need to be reimbursed for what you spent for your business that should have gone on the business card. Okay. Now, I'm not going to spend all day talking about how to create an accountable plan. For many of you guys that join the tax-free wealth event, you guys will get access to my accountable plan software. You can also just Google, how to formulate an accountable plan. It's extremely easy. But this is part of doing what's called best practices as a self-employed business owner, is establishing your accountable plan so that you can reimburse yourself every single time that you're making a mistake. And it's going to happen. There's 365 days out of the year. There'll be at least 5 to 10 days out of the year where you just are not operating the way you should be operating as a business owner. You swiped the wrong card. Okay. Should you be penalized for doing that? Not if you're doing best practices. If you establish an accountable plan right now, you can reimburse yourself for all of the expenses that you've taken personally that should have been allocated over to business, get them pushed over into your business's profit and loss statement with a journal entry, AKA I like QuickBooks, in case you're wondering if I'm using an accounting software. Take the deductions that you should have thus otherwise taken on your business account, and then reimburse yourself back personally for those expenses. Is this making sense for somebody? Put a yes in the chat box if this is making sense. Put no in the chat box if this is not making sense. Okay. The last thing that I want to cover here, because there's honestly, we could just sit here and talk all day, is not knowing the tax forms for LLCs. Okay. If you've never been taught how to read through a tax return, I'm definitely encouraging you to sign up for the tax-free wealth event, because I'll be breaking down how to read through various different tax forms so you actually understand where your deductions go. But the biggest issue that I see with these LLC owners who are afraid to grow their businesses or afraid to take risks is they don't even know the tax forms associated with their LLC. It's hard to become a successful business owner when you never get your hands into the kitchen. It's 100% okay to outsource your tax preparation. It's 100% okay to outsource your bookkeeping. It's 100% okay to hire employees to help you with your business. It's not okay to not know the ingredients that make up the pie. And for you, it's the ingredients that are needed in order to file your tax returns every single year. So let me go over some of these ingredients that get prepared in order for you, everyday taxpayers, to get your returns filed as an LLC owner. The first form is called the Schedule C form. If you decide to start an LLC as a single member LLC owner, meaning you're the only person, this little C will be present inside of your tax returns. It'll say Schedule C in the top left-hand corner. The Schedule C reports all of your business's income and expenses all on one document. All of your business's income and expenses for the year for your LLC will get reported on one document inside of your individual tax returns, inside of your tax returns. That's called a Schedule C. Now, if you decide to go into partnership with someone, you're going to see a 1065 tax return that gets filed separately outside of your individual return. There is no Schedule C anymore. Schedule Cs are only for solo members of their own companies, which means that if I decide to start a partnership and go into real estate with my brother, cousin, uncle, I'm going to file a 1065 form. I'll never see the Schedule C form inside of my tax returns. A 1065 tax return is a partnership return. This is only completed when you have another partner or partners, plural, inside of your business. Now, in order to understand how important the 1065 form is and why the 1065 form has to get filed prior to your individual tax return, is because your 1065 form will produce what's called K1s. Okay? K1s, and don't get stuck in the term K1. What does the K stand for? What does the ones stand for? It's just IRS terminology. A K1 form, I want you to think of it as like a W-2 that comes from the business. Me and Mr. Ronald McDonald decided to start McDonald's together. So me and Ronald McDonald decided to start McDonald's together. I own 50%, Ron owns 50%. Our business made $100,000 in the year. Ron makes $50,000 on his K1. Carlton's going to make $50,000 on his K1. So the K1 is almost like a W-2 that comes from the business, but it's not a W-2. It's just your percentage of the business's profits. So the K1 reports, just like the Schedule C, your business income or your business loss amount. Okay? Which means that if my business income came over as $50,000 from the partnership, I'm going to see $50,000 on the K1 that goes inside of my individual tax returns. If I ended up having a loss with me and Ronald McDonald here, and we took a $100,000 loss, I'm going to have $50,000 in a loss that shows up on my K1 form. Now, the reason why the K1 form is so important is because you cannot file your tax return until you have all of your K1s recorded. You'll notice that most taxpayers who are making more money, I'm just being real, they always go on extension. The reason why taxpayers who are making more money will go on extension is not because they're taking a longer time to figure out all their tax deductions, even though that is sometimes the case. The reason why they take more time is because they're waiting on the K1 forms from the partnerships that they've involved themselves in. If I went into partnership on a real estate deal or a real estate syndication, I have to wait for the real estate syndication to file its 1065 tax return in order for me to get the K1 from it. If I decided to partner with Ronald McDonald and we started a McDonald's, me and Ronald have to go file that 1065 form. Then we get our K1s each to go file our individual tax returns. So if I'm at liberty of waiting for Ronald McDonald's corporation that he hired to file the tax returns, and I'm in this other partnership in Florida, and I'm in this other real estate partnership in Dallas, Texas, I'm at liberty of waiting for these particular businesses to give us back the K1 forms after they filed the 1065s. So most taxpayers who are investors who are investing in businesses, partnerships, will go on extension for this exact reason. They don't have their K1s yet. I know that some of the investments I'm in, like, dude, I don't get my K1s until like June, July. And then I know, like, okay, now that I finally received all my K1s, now I can start preparing my tax returns, right? But I'm at liberty of waiting because of the different partnerships that I'm in, and maybe you're in different partnerships as well. So these three separate tax forms, the Schedule C, the 1065, the K1 form, are some of the most important tax forms that you need to know. These are ones that I would tell you, yeah, these are the ones you would memorize. These are the ones that you would actually need to remember. But here's the thing. There are two other tax forms that you need to be aware of when you're an LLC owner. That's the SS4 form, which is how you apply to get your EIN number to become an LLC, and it's the 1099 form, which reports all of your income as a contractor. As a self-employed business owner, these are going to be the 5 forms that you're going to see the most. You're going to see a Schedule C form that goes inside of your individual tax returns. You're going to see a 1065 form if you're in a partnership. You'll get the K1 after your partnership files the tax returns. If you're setting up a brand new LLC, you're going to need to apply to get an EIN number, which means you're going to complete an SS4 form. It's just a one-page document that goes over who is applying, which means you have to put your Social Security down in order to get an LLC EIN number. And by the way, if you're working for somebody, you're a 1099 contractor, you're going to receive a 1099 form at the end of the year that you're going to report inside of your LLC's tax return. Either it's going to be a Schedule C or a 1065. These are the forms, okay? The tax code is dense, but these are the only forms that you really need to keep your eyes on and need to be aware of. Now, if you're going into rental real estate, we can talk about Schedule E's, we can talk about 8879s, a lot of other different forms that are extremely applicable. But for the majority of LLC owners, understanding the differences between a Schedule C, a K1, a 1065 will allow for you to feel more confident knowing how your business is operating every single year when it comes to taxation and knowing what you could do in order to best prepare for filing your returns year over year. Now, quick recap, because I want to make sure you guys understood what we were talking about for some of you guys that are joining late. We went over 5 biggest LLC mistakes to avoid. Not knowing the type of income that you're receiving through your LLC is a mistake. Because if you're having your passive income or your portfolio income being subject to Social Security and Medicare taxes, you're doing it all wrong. Passive income and portfolio income should never be subject to 15.3%. Earned income from a W-2 job or a 1099 job should be the only income that's subject to Social Security and Medicare, which means that you should never switch your LLC to be taxed as an S corporation if you have passive income, right? Now, second thing is if you're an LLC owner, you shouldn't put W-2 income into an LLC for tax savings. You can self-fund your LLC or make a capital contribution to your LLC to get your business started. And that money needs to be reimbursed back to you, which means it should be listed as an asset on the books. The reason why we do not put W-2 income into LLCs unless we're doing a capital contribution, aka we're self-funding our LLC, is because that money that we earned is already subject to federal, state, and self-employment tax, 7.65%, Social Security and Medicare taxes. Why would I want to tax myself twice? Are you following me? Now, outside of putting W-2 income into an LLC and doing it incorrectly, not establishing your LLC prior to closing on a rental acquisition can hurt you because of this little terminology called the due on sale clause. You know, where the mortgage lender wants you to pay your entire mortgage all up front because you transferred your property into the name of an LLC. Are there ways around getting around the due on sale clause? Absolutely. We teach that inside of Tax Alchemy. But this is an issue that occurs, and without a proper strategy, you're going to be left to fork up the bill. I believe that it's extremely important to know how to treat the ownership of an investment property. And for many taxpayers that are getting into real estate, they want to have liability protection. So they should be closing in the name of an LLC and establishing the LLC prior to closing, which leads me into the LLC's characteristics. In order to have an LLC, you need to get an EIN number. In order to really truly have liability protection, you need to set up your business banking account and separate your personal assets from your business assets. That way, your bank accounts on the personal side, your cars, your IRAs are not exposed in the event of a lawsuit, and creditors can't come after your personal assets. This is how you do best practices as a self-employed business owner. Not knowing how to reimburse yourself is where business owners can get themselves trapped, because you might make a mistake and you might pay for something business on your personal card, and you want that to be a write-off for your business, but you haven't taken it upon yourself to reimburse yourself personally for the expense. This is done through establishing an accountable plan, which an accountable plan can be established today. And you're going to track the information that you're taking on your personal card that you're allocating over to business and track how much you need to reimburse yourself. Hence, you're accounting for everything with a plan in place. Accountable plan. Okay. Number 5 is not knowing the tax forms that make up your LLC. I think we covered those today, but I'll be breaking down some of these tax forms during the 5-day tax-free wealth event. The Schedule C, the 1065, the K1, the SS4, and the 1099 are all some of the most important tax forms for you to know as a new LLC owner who's just getting into this. If you're watching this right now and you're saying, Carlton, this is a lot, I'm letting you know something. We are not even touching the tip of the iceberg as it pertains to the information that I would like for you to know prior to the end of the year. As a tax strategist, this is my duty and my obligation to make sure that I'm teaching you the information that can help you reduce your tax bill. But I also need to educate you about the different things that you should know as a business owner along the way. One of the things that we'll be doing kicking off on Monday, October 30th, is the tax-free wealth event. I am going to teach you all of the top tax secrets to paying less in taxes over 5 days. During the tax-free wealth event, you'll show up on October 30th and it'll go all the way till November 3rd. And what I plan on teaching you during these 1 to 2 hours, because that's all the time that I'm asking for you to commit because it's online, is I'm going to teach you the mindset of paying taxes like the 1%. Some of you guys have seen taxpayers like Donald Trump, Robert Kiyosaki paying 0% in income taxes or $750 in taxes. You just can't understand how does the IRS allow them to do that? There's a mindset that you need to adopt in order to pay as low as 0% in income taxes. And I do have many taxpayers, including myself, that will be paying as little as 0% in income taxes this year. And we're not cheating the IRS, okay? When you have the right information coupled with the right mindset going into this, you understand what the IRS understands, and you're playing into the IRS's rules and the games that are inside of the tax code. Day 1 is going to be mindset, and we're going to cover everything that you need to know to not fear the IRS and to be able to take your deductions in confidence. Day 2 is advanced entity structuring. Most taxpayers who are going to be following me on day 2 are going to need to know how to retitle the name of their LLCs to be owned by their trust, or have separate entities own their current operational companies. Some of you guys just need to know the differences between an operational company, a holding company, a trust, and also establishing a management company. So we're going to discuss advanced entity structuring on day 2, and I'll show you how I structure entities for my taxpayers and how I would like for you to structure your entities. Some of you guys that will be joining me for day 3 will go into advanced auto and home office deductions. Now, advanced auto and home office deductions is a little bit of a surprise because I know that I've already talked about how to take a home office deduction, how to write off a vehicle, but I'm going to be teaching you guys an advanced way on how to utilize your entire home as a write-off. I'm going to be teaching you an advanced way on how to utilize a vehicle that may have already been depreciated as a tax benefit to you. So if you show up to day 3, you'll be learning something completely new as it pertains to auto and home office deductions that I have not taught on my YouTube channel and is not currently in any of my online programs. Day 4 is income shifting strategies. Some taxpayers need to take a lot of income off of the tax returns, and they need to do so outside of just buying real estate. So if you're showing up to day 4 and you're an S corporation owner, or you're an LLC owner, you're making over $250,000 profit, or you're making over $1 million profit, or you're making over $5 million profit, I can teach you how to take a lot of income off of your tax returns legally without subjecting that income to be subject to taxes this year, and being able to strategically buy yourself more time to spend down the income that we take off of the tax returns. Day 4 is one of my favorite days because I'll be able to show you guys some of the strategies that I utilize myself every single year that helps me reduce the tax liability associated with my corporations. Day 5 is advanced real estate tax strategies. During day 5, we're going to cover all of the short-term real estate tax strategies, all of the loopholes and pitfalls, how to qualify you or your spouse as a real estate professional, how to break down a cost segregation study, how to accelerate depreciation and boost your tax losses, and I'll break down inside of tax returns for you what it all looks like to see the numbers inside of a tax return. I'll also bring up members who are already inside of my mastermind to be able to speak with some of you guys on day 5 in regards to how they were able to leverage this tax code year over year to pay as little as 0% in income taxes. I am going to be teaching every single day during these 5 days. So when you sign up as a VIP, you're paying $297 to actually spend an additional 30 minutes with me, as opposed to the general admission that gets me for just an hour for that day. Another benefit to being a VIP is, yes, you'll be a part of the 5 days exclusive training, but you'll also get access to my high-level Q&A coaching that I'm going to do before every day's coaching session. So when we jump online, we will kick off 30 minutes earlier, and I will open up the stage to you to come up and ask me the questions that you might have. And I really want to make sure that this time is being utilized correctly. When you come up and you ask me questions, I really want it to be about your financial situation. So feel free to get vulnerable with me. Tell me what type of income you're making, what your biggest fears are, what things you're considering. And what I'm going to do is I'm going to help you plan your tax strategies during these 5 days. So some of you guys will get to talk to me 2-3 times in a row. Some of you guys who show up will get that opportunity to speak with me one-on-one. And that's part of the reason why you're paying for that additional time, right? If you're going to be a VIP, you're paying additionally to have that time with me in the Q&A session. Last time we did this, a lot of people said they really enjoyed it because they got their questions answered from hearing other people, and they learned about new tax strategies just simply from hearing other people's situations. Another benefit to being a VIP is you'll get access to my proprietary tax strategy opportunity finder. So I've created a software that allows for me to determine whether or not you're overpaying on taxes. And I think a majority of you guys are wanting to know that information. Like, Carlton, how do I know I'm not doing everything I possibly could be doing to reduce my tax bill? Is there a way for me to just figure it out if I'm overpaying? So I created a tax strategy opportunity finder that's exclusive to my VIPs, and you guys will get access to that after day 1. Plus, you guys will be in your own community, and you guys will have separate Zoom calls and separate homework. Plus, you'll get all the recordings of every single session. General admission, you guys are 100% still involved. You guys will get all the recording sessions. You'll get access to the community. You'll be a part of the 5 days. The only difference really is you won't be able to see me in the Q&A session. So I won't be able to have that one-on-one time with you in the Q&A session. You won't get the tax strategy opportunity finder, and I won't get to see your name and who you are inside of the Zoom room because you'll be actually calling in live from our community. So if you're wanting to spend some additional time allowing for me and my team to help you guys orchestrate some of these strategies, I would absolutely recommend to purchase your VIP ticket, and you guys can take advantage of that right now. My team is dropping the link, and I will go ahead and drop that link for you. A couple of the bonuses that you guys will receive upon purchasing your ticket as a VIP is you'll get the short-term rental ebook that I just created. This ebook, The Short-Term Rental Rule, How to Reduce Your Taxes Like the 1%, goes over the entire tax strategy around the short-term rental law. If you didn't know, the government allows for you to invest in short-term rentals, and you can accelerate depreciation without having to spend 750 hours out of the year managing your own investment property, and be able to qualify to use real estate losses to offset your W-2 and 1099 income. Some of my clients, Matt and Amy, took it upon themselves to work with me on implementing the short-term rental strategy. And we break down their entire process from the moment of them getting their W-2 jobs to trying to pay off their student loans, to maxing out their 401ks, to running into tax alchemy, to investing in their first short-term real estate, to creating their first real estate loss on the tax returns, to avoiding depreciation recapture, everything that you could possibly think of. They had questions about, and their entire situation, everything, they allowed for me to duplicate and put into this ebook for you guys. Obviously, I protected them by changing their names, but this is their entire case study here. And I break down the IRS, the laws, the court cases, everything that you would want to know as it pertains to leveraging the short-term rental strategy. So you'll get access to this ebook by signing up as a VIP. VIPs who have children, I got you. If you're looking to place your children on payroll, which is also an income shifting strategy, I've created this little mini course here for you to get access. Now, I'm only giving out this guide first to the first 10 people that purchase their ticket today. Okay, so if you're wondering, Carlton's just giving all this out, no, this is actually exclusive to the first 10 people who sign up as a VIP. I have my cell phone here, so I can see who's signing up right now. But to the first 10 people that sign up as a VIP, you guys will get access to my Children on Payroll course. This teaches you how to place your children on payroll, how to make a payment, how to document placing your children on payroll, and how to establish legitimate work and estimate the potential tax savings. I think it's crucial to have a program that teaches you how to successfully place your children on payroll. So you guys will get access to this, and feel free to take this program prior to showing up to day one. A lot of you guys will get access as well to the LLC Tax Strategy Blueprint. This will show you how to formally set up your LLC correctly by choosing the correct name, appointing a registered agent, utilizing your EIN number, establishing your articles of organization, as well as how to handle your operating agreement in case you're going into partnership with somebody. Outside of just setting up the LLC, you're going to need to take some strategies if you're new to an LLC, such as how to pay yourself correctly, how to take your business meals, how to take vehicle deductions, how to make sure you can travel with this new LLC and make it a write-off, with also not fearing the IRS. So I just want to make sure that all of you guys know that you get access to this program as well. And this is here for all of you guys. The Home Office Tax Strategy Guide is the last guide that I'm giving out when you sign up as a VIP. The reason why I'm giving out the Home Office Guide is because on day 3, you guys will notice that I'm going to be teaching on advanced auto and home office deductions. So I want to make sure that you at least have the regular Home Office Tax Strategy Guide. This is where you guys can see how to take a home office deduction. If you're new to being self-employed, I'm teaching you how to convert an area or a space in your home to be a business space so that you can go ahead and deduct that from your tax returns and reduce your overall taxable income. So these 3 courses, these are all your guys's. I'm so happy to be able to share this ebook with you as well. It took me and my team quite a bit of time to be able to put this together. And we kick off in exactly 10 days. I see here that there's some people that are purchasing their tickets right now. So I just want to take some time to congratulate some of the members that are purchasing their ticket. Let me congratulate Kim Kevin. Congratulations, Kim. Amando Giuliano. Congratulations, Amando. A Dave 3. Congratulations, A Dave 3. Boss Lady. Congratulations, Dr. Boss Lady. Jerry Williams. Congratulations, Jerry Williams. Miriam Moa. Congratulations, Miriam. Bo Huyun, congratulations, Bo. Gregory Simon Scott, congratulations, Gregory. Shram Internala, congratulations, Shram. Mercy Hernandez, congratulations, Mercy. This one's kind of hard to pronounce. I'm so sorry. Joseph Corrado, congratulations, Joseph. Sunny Sir, congratulations, Sunny. Fernaz Pedram, congratulations, Fernaz. And Brand Weiser, congratulations, Brand Weiser. So it looks like we've already gotten to 10. So I want to say thank you guys so much for joining me on here. What I'll do actually, because that was pretty quick, is for the next 5 people who purchase their ticket, I'll have my team just send you guys access to those 3 mini courses. Also VIPs, when you guys jump into the community, you'll notice that you're inside of a community with other VIPs. All of these people that are in there are high-level entrepreneurs, high-level investors, and they want to connect with you. So go ahead, jump in, say hello to the community, say what up. I'm in there. I'm messaging you guys back. I'm responding to messages. Some of you guys are already entered into the raffle to win iPads. I think we're giving out AirPods. I'm giving out cash, which is not the point of joining this mastermind, but it's just nice that we're having a good time inside of the community. And for many of you guys that are wondering, hey, how do I get on Carlton's schedule? How do I have a phone call situation with him? How do I work with this guy? Unfortunately, there is no way to work with me outside of going through the tax-free wealth event. And the reason why is because I get to identify the people who I want to work with, right? Like it's not, I'm not running a business where I just say yes to everybody. I'm just being real with you. So if you're trying to work with me, feel free to sign up as a VIP. And you will have your chance to talk with me, and I'll have my chance to ask you questions too. But this is us identifying whether or not we're going to be a great fit to work with each other and whether or not there's opportunities to actually save you money relative to the investment that you would be making to have me hired as a tax strategist. So when you show up to day 1, I want to make sure that you're coming ready with your questions. When you show up to day 1, I want to make sure that you're expecting to learn things that are not covered on my YouTube channel. And when you stick with me during these 5 days, I'm anticipating you to walk away with anywhere between 25 to $50,000 in tax savings, especially for you six-figure earners. My name is Carlton Dennis. I want to say thank you so much for joining me on today's live session. If you like this, go ahead, like this video, comment it, share it with somebody who you think is valuable, important for them to know these 5 LLC mistakes. And I look forward to seeing you guys all on October 30th when we kick off the Tax Free Wealth event. Thank you guys so much, and I'll see you guys later. Cheers.